Hello everybody, this is Jack O'Halloran, CEO of Scale Labs, here with the Block Insider series. We're going to talk to Adam Jackson today, the co-founder and CEO of BrainTrust. Adam has a very long background in Silicon Valley of starting companies and specifically companies that create marketplaces. So he's an expert in network effects, actually an expert in token economics now as well. And we're going to get into some fun topics and talk about disruption. We're going to talk about the future of work. And frankly, we're going to talk about some things that people have been scared to talk about for a while because people have been so stuck in the recoil of the last winter in crypto. So get ready and find a nice warm place to sit down and get ready for some fun. Here we go. Adam, I have to say, you're very unique when it comes to the crypto and blockchain market, when it comes to entrepreneurs of having such an extensive background and actually track record of success. We're seeing a lot of amazing first-time founders come in the space, but people like yourself are a little more rare. Could you tell the audience here a little bit about your background and how you got into blockchain?
Sure, yeah. I mean, we're the old guys in the space, I guess, so it was bound to happen at some point. So I'm a software engineer by training. I did computer science at Vanderbilt, moved out to San Francisco just after school. That was about 16 years ago now. In that time, I've started 4 venture-backed businesses, BrainTrust being the fourth one, as well as a digital asset management company. All the businesses were marketplaces and all in different categories. So I really love the business model, and that's actually how I got into the token economics, which you get to later. But the first business was an e-commerce local shopping business acquired by Intuit. That's back in 2006. Second one was an automotive marketplace that connected drivers with car mechanics that had excess capacity in their service bays. We grew that into a national marketplace, which was acquired by Advance Auto Parts, which is a big box retailer back east. Third company is called Doctor on Demand, which is a large video telemedicine service. I started that in 2012 with 2 other guys, Jay McGraw and his dad, Phil McGraw, who's actually better known as Dr. Phil from TV. That was back in 2012 when there was sort of an app for that craze for everything. And so we built this kind of clever direct-to-consumer cash pay, see a doctor over video for non-emergency medical cases. I ran that as CEO for about 4 years, grew it into a pretty big enterprise healthcare company and realized we needed to put a real manager in place. And so we did that. We found Hill Ferguson, who'd actually been an old friend of mine. Hill now runs it day to day. One of the few silver linings from the COVID thing is Doctor on Demand's been able to fill a big gap in providing medical care over video. So that company's really grown quickly and will hopefully go public next year. And then I started after I unwound my day-to-day duties at Doctor on Demand, went back to my true passion, which is deep tech. And so I got really into blockchain tech and spent a lot of time looking at token projects and participating in crowd sales and writing smart contracts and that kind of thing. And started a digital asset, or helped start an asset management company called Cambrian along the way with 2 other guys, Martin and Jay, who are really smart financial people. And out of my research at Cambrian came the idea for BrainTrust. So that's kind of my arc into the space.
It's phenomenal to see people like yourself come in and make the space move faster, not have to relearn other things that we've learned through trial and error in Silicon Valley. You can apply
hard knocks.
Yeah, exactly. Let's put our mistakes to work, right, in a new space. So that's awesome. All right. Well, a lot of people in podcasts like to ask, well, what was it that got you interested in blockchain? I think for you, it's pretty clear your interest, knowing your technical background and conversations you and I have had. But could you be more specific and say, what was it that made you want to start your next company in this space? What was that kind of like magic moment or event that happened?
Yeah, well, I'll tell you first, what actually got me into this space, I got into the space it was around 2011. I was still just about to start Doctor on Demand. And a friend of mine, who I won't name, runs a series of offshore casinos. And he was always looking for new payment methods. And he got into Bitcoin early and told me about it. And so I bought some and, sort of forgot about it, fortunately. And so, the remittance, the payment, the store of value use cases for blockchain, they're always very apparent to me. That's not what I was fired up about, though. That's not what got me passionate. It was really around the time of the Ethereum crowd sale that I got into the space full time, where I saw we have this new Turing complete blockchain where code can be law, and these tokens could represent new ownership models, new way to structure firms, new ways to build incentive systems in a trustless way. And you could reorganize the way people form networks and companies. I was like, wow, this could like reinvent the firm. It could reinvent marketplace dynamics. There's like so many things that are fucked up and lopsided in the economy that are really unfair and really bad for business. And like these tokens, these programmable money that could replace shares of a Delaware C in a lot of cases, it was limitless possibility. So that's what really got me into it.
So let's talk a little bit about brain trust. Can you talk about brain trust, what you're trying to accomplish, what brain trust is?
Yeah. So brain trust started as part of my research while I was at Cambrian full time. At Cambrian, my job was to do early stage investing, and so I would build a thesis and then find teams around the world that met that investment thesis. And the thesis was a blockchain token could represent ownership and an incentive mechanism in a two-sided marketplace in a way better way than old marketplaces had run. And I've been building marketplaces my whole career, right? And marketplaces, it's pretty simple. You build a trusted environment to transact, and then you as the operator try to grab as much of that transaction as you can in the form of a fee, right? Mm-hmm. Not that hard. It's actually very elegant and simple, but it's very hard to build, right? Mm-hmm. And so I'd been doing that my whole life and been a fee extractor basically my whole life. And I thought, wait a minute, like, kind of what ends up happening is these networks get big and the incentives between the operator and the participants end up diverging, right? So you see Amazon sellers would do anything to get away from Amazon and that big fee. Uber drivers hate Uber, that kind of thing, right? So I thought, well, what if you could build a system where marketplaces could be owned and controlled by the people who actually use them, the buyers and sellers, and not just the operator trying to extract as much as he can, right? And so this is like, well, you could do that with a token, right? You could program a token to be this incentive mechanism and be better than shares of stock. And so I developed this model. It was back in May of 2018 of here's how a tokenized marketplace could work, and here's how it could grow faster and be more valuable than an investor-owned marketplace. And so it was a model looking for a category at that point. I knew it could work on any two-sided category, but the thing about tokens, like if you're going to use a token as an incentive mechanism, the people on the network have to know what a token is and have to like be able to possess it and store it and conceptualize it. And so if you were to like say tokenize Etsy, you'd be teaching maybe an older generation or non-technical people what a token is. So you're like climbing that hill and it's making it even harder to build a marketplace, which is to begin with a hard thing to do. So long story, slightly less long, we picked for Brain Trust this very narrow category of connecting really experienced designers, developers, product managers with US Fortune 1000 companies that need them, right? So really easy use case. It's a fairly narrow category. It's a very deep one, right? There's a ton, hundreds of billions of dollars of business there to have. And so that's what Brain Trust does. It connects those two parties in a marketplace.
A majority of business models that came out that incorporated a token was people performing real work did not want all of their real work to be potentially worth 10x one day and less than 10x the next day. However, there's still an opportunity to create network effects with tokens while taking into consideration if I'm driving an Uber around, I don't want to work for $2 an hour here and 10 here, and then a month later I didn't liquidate that into fiat, and then it's just too unpredictable. So I feel like Brain Trust has figured out some really interesting things around that dilemma while not giving up your potential for network effects. Can you talk about that a little bit?
Sure. Yeah, you hit on a really good point. So when tokens came around into sort of the tech mainstream in 2016 and 17, everyone sort of said, oh, well, like it should be Bitcoin, it should be new cash, right? And so we'll have this token will be the payment system for ride sharing, and this one will be a payment system for deliveries. And I didn't agree. That premise made no sense to me. I thought, look, the world has enough payment layers, right? The dollar is the safest payment layer in the world. It's globally accepted. Of course, we need a digital dollar, right? So stablecoins always made sense to me. Bitcoin still makes no sense as a payment layer, right? It's a great store of value and it's an inflation hedge or whatever. But So I said, look, you shouldn't ask a driver, an Uber driver, to be paid in some weird currency that could be plus or minus 25% any given day, right? This is like, this person needs to eat with this and pay rent. And so I thought, look, let's build a model where the token is not a payment layer. Like, use dollars or euros or renminbi for payment and use the token as an incentive mechanism, right? Like, think about it like a bonus you get for doing something to help the network. And that's all Brain Trust is, right? There's not a ton of uses for the Brain Trust token other than, so it represents ownership and control in our network. And when I say ownership, I mean control. I don't mean like, oh, I get a dividend or something. It's not a security in that sense. It's one token equals one vote in the network, and I can use it. I can use that vote to decide what the rules are, like what fees should we charge clients, who should we let into the network, right? You're literally controlling the network through this token. And the only way to get that token is to do stuff that helps the network, right? We don't sell the token, right? So if you invite other talent to the network, we'll give you tokens. If you invite a client, like we had some random person invite a big bank to our network, and as soon as that bank starts transacting, they're going to get a percentage of those transactions kicked back to them as a bonus in the form of our token. We have some people who act as talent screeners. Like if you join and say you're a great Python developer, this person will interview you, and we pay them Brain Trust tokens for doing that. So all these tasks that like you'd normally hire employees to do, instead we just give the community tokens for doing them. And that's how you go from 0 to 1. You end up becoming, you go from a centrally controlled network to a completely decentralized, user-owned, user-controlled network.
I think for people listening, like key things to take away from that are, one, the actual work isn't damaged by fluctuation in the network value or the token value. The correlating network growth components of referring or getting a percentage kick on your fee in that token actually turns people into stakeholders and co-owners of the network, essentially.
Exactly. You basically, and yeah, to reiterate, all jobs done on Brain Trust are paid for in US dollars, right? We use PayPal and TransferWise and Stripe and all these great payment rails. Like, I'd love a Libra or a Dai or whatever. I think those are all great things, but you can't like pay your rent and buy groceries with that stuff yet. I'm sure you will soon, right? And when we do, we'll have that on Brain Trust. But Nestle and Deloitte and these big customers we have on Brain Trust, they want to pay with cash. They want a wire transfer, right? And so, and most of our talent need to pay rent, and they want to earn dollars or euros. So that part is just like legacy. When you put the token in as a bonus for everything else, you then make your entire user base the stewards of your community, the filters, the curators, and the salesmen, right? Like we do have a small internal sales team, and they're really badass guys. But a lot of our business comes from referrals from the network, right? We call them connectors, right? They're people who show up. They're not there to work or hire. They're there to connect. And these people can earn, giant stakes in the network just by, making introductions.
Yeah. As someone who started numerous marketplace businesses, right? You think about this, a big component is creating network effects, right? And I think there are a lot of people that confuse virality and network effects, and there's actually a science and an art around what a network effect is. And I just want to ask you, like, can you opine a little bit about like how would have tokens have impacted the prior business you could have built before, and how much faster and how much more growth would have you gotten? And how does that translate it back into what you're doing today and what you're applying into the economic structure for creating network effects in the Brain Trust environment?
Right. Jack, it's an awesome question. It's something I'm so passionate about. I spent my whole career trying to figure this out. As a cursory, strong network effect, definition of a network effect is when a new user joins a network, that whole network becomes more valuable, more usable. And so they're very hard to build, and they're nearly impossible to destroy. And so all marketplaces, I couldn't even think of a marketplace that doesn't enjoy strong network effects, at least one with a lot of liquidity. So with Brain Trust, with any marketplace, you start with a little bit of supply, then you draw on the demand, or Bill Gurley would say the other way around, you aggregate demand and then layer in supply. It doesn't matter. You need to balance supply and demand, and then build and build and build. And so usually do that through clever tricks, and there's like good product and whatever, and there's no playbook for that, right? It's different for every category. With tokens, when you add a token to the mix, it's like this unfair advantage. This is cheat code for building strong network effects. And so the way Brain Trust does it is our token, so again, we're not a company. We don't have shares of stock. We are a global network whose ownership and control are represented by an ERC20 token. And that token allows you to vote and govern the network and control and set the rules and control the fees and say who's allowed in, who's allowed out. And really, like, if you're a freelancer running your business and you get to run the rules, like, that's a nice advantage, right? So it creates an incentive to own this token. And so we started with hiring, 50 of our closest developers and product managers, getting them set up their profiles, and then they invite more. And then you bring in a big client like a Deloitte or Nestle. Some of our early clients are Samsung, and then they start posting jobs on BrainTrust, and that gets the interest of other talent because that's where all the money is. Like when you're a freelancer, you don't want to work for like the dentist in Florida. You want to work for Samsung, right? He's got all the money, and so you start building supply and demand in the normal way, and then you juice it with the token, right? You say, okay, the token allows you to control the network, and the only way to get the token is to help us build the network. And that means invite more talent, get more tokens. Invite clients, get a percentage of the tokens that they transact. Help interview new people, get more tokens. Create educational content for BrainTrust, earn more tokens, right? And so this token now becomes, and one could say, well, like, why can't you do that with Bitcoin or cash? Well, you could. But like then I'd have to go raise $200 million and give it away to people, right? Like it's not a capital efficient way.
The other piece of this is there's a hodling element to it. The fee, now, hey, if you're paying me, if I do a $10,000 job and you pay me $10,000 in the token, well, I'm not hodling that. I'm transferring immediately into a stable currency. But you're paying me in fiat, and then you're giving me also a component, right? In BrainTrust tokens, or I'm referring somebody, so there's a hodling element. Yeah. So people are referring and holding so that because they feel like they're going to be worth more in 2 years and 3 years and 4 years, and then they're working and they're actually becoming co-owners and these tokens are not shares. Tokens are pieces of software that function, but they also can accrue in value as the community and the service and utility grows in value, right? So sure. There's an element there. And so I'm wondering, how do you think of token for people doing work? Is there also a component where they're getting like topped off on whatever percentage with an additional BrainTrust, or is it really all about more incentivizing the network effects too?
Yeah, it's both. So all of the uses of token I mentioned before we're directly rewarding you with tokens for doing things that build the network, add supply, add demand, curate, right?
Yep.
But we're rolling out a feture where if somebody did a great job and Samsung wants to bonus them, Samsung can bonus them with tokens, right? Like that's the kicker. Or we're going to start gamifying it, right? So we'll have a leaderboard. Whoever gets the most 5-star reviews in the month of May gets this big token bonus, right? Whoever writes a piece, maybe on social media that gets the most engagement that helps drive the network, they get a token bonus, right? So you can gamify the whole damn thing, and you're rewarding people with this token that you were able to print out of thin air. You didn't have to go, raise a bunch of venture capital money and dilute the cap table. And
how are you giving back that margin to the users who I would say the demands, the supply side of the network, and I'm sure there's a give back to the demand side of people purchasing and buying talent. Like, how are you making BrainTrust a good actor who, is a disruptor here? I'd say a good actor in the sense that you're not just doing what most marketplaces have to do because of their business models. What are you doing at BrainTrust?
Yeah, I love this question because we're doing two things. We're being disruptive, but more importantly, we're creating a new category, right? Any new technology that enables a new business model should enable a new category, right? You don't want to just be the low-cost carrier because the main carrier could just drop their prices for a while until you die. Right, like disrupting on price alone is not enough of a moat, right? And so what we do is, and so that's part one. Part two is, I think the entire point of a token, and I'm going to quote one of our close friends, advisors, and investors, James Everingham, who is the chief architect at Libra. He was the CTO at Instagram before. He's a phenomenal technologist. He's doing great work at Libra. James says the whole point of a token is to disintermediate a middleman who's extracting disproportionate value from a network, take that value and give it back to both sides. That is the whole fucking point of a token, right? In token economics, right? I'm not talking about remittance or store of value. And if you think about it, that's what Libra's doing, right? Libra's saying, fuck the banks for taking all these fees, MoneyGram, all these Western Union who take giant fees. Libra's going to let you send money limitlessly, right? So BrainTrust does the same thing. So in the talent marketplace world, you have marketplaces like Upwork or TopTal that take anywhere from a 25 to 50% rake. So if you make $100 an hour as a designer, you're getting billed out at $150 to the client. That's not great for the talent, right? They're leaving money on the table. It's not great for the client, right? Because that doesn't really scale. It's great for the middleman. And so the BrainTrust token comes in and says, look, we don't believe in that model. We are owned and controlled by all of our members. So our incentive is to get that middleman fee as low as possible. And what does that do? It doesn't just make $100 or $10,000 jobs cheaper. It enables multi-million-dollar jobs that would have never touched the marketplace to now transact in a clean, trusted, transparent way, right? You're expanding the category. You're actually creating transactions where there weren't any before. And you're taking that 50%, you're dropping it. Our fee is 10%. We charge 0% to the talent. So by default, we're attracting the best talent in the world because we're not taking any fees from them. They love that. By the way, we live in a talent-constrained world, right? There simply aren't enough data scientists. There aren't enough Python engineers compared to the global demand that there are for them. So we bring the best people on, and then we bring in the Fortune 1000 companies that need them, that can't possibly hire these people. And we say, look, you're going to pay a 10%, flat 10% markup. The talent pays 0%. And your money, so if you have a $10 million IT budget this year, your money's going 40% further because you're not paying that stupid marketplace fee.
Yeah. So let's distill this down into some pretty simple terms. So let's say I got paid there's $100 job. I build an algorithm, I get paid 100. Obviously it's going to be more, but let's say it's 100. In typical marketplaces, the talent might get what, like $70? 50. Okay. Can you break that down for us, what it looks like before and after?
Yeah. So let's stay with 100, but let's say 100 grand, right?
Okay, that's better.
Right. That's actually a typical job on BrainTrust, about 100 grand.
Yep.
So let's say it's a big bank. They post a job and they say, we need this app designed for 100 grand or an algorithm or data warehouse. There's bids. They find the best person. They contract. The talent agrees, okay, this is a $100,000 job. Let's say it takes 30 days. Job's done. Everybody's happy. The system, the BrainTrust platform, then issues 2 invoices to the client. One for $100,000 that when that's paid, it goes directly to the talent. We take no fees. There might be a little Stripe fee or a little TransferWise fee. And then the second invoice is for 10% of that. That's $10,000. That gets issued to the client, and the client pays that, and that goes to the BrainTrust Foundation.
Let's talk about more about disruption. So what you mentioned earlier, when you have a network effect, it's almost impossible to break that down. So one of the cool things about cryptocurrencies and currencies being integrated as part of a fee structure or reward structure is it's actually kind of a secret weapon. It's now secret. It won't be secret in the future, but it's a weaponized way to get people to operate in a network that's not really efficient yet, right? And so I think BrainTrust is doing things that are best practices, like you're starting with a narrow view. You're not, you're finding your Beanie Babies of the world that you live in, but tokens are also a way to break down network effects that exist because of the disruptive nature and quality of the token. So can you talk a little bit about that?
Sure. Let me make sure I understand the question.
Let me just clarify.
Yeah.
So tokens also help you beat the chicken and egg problem when you're trying to beat a current network effect.
Yeah.
And can you talk about how?
Yeah. No, I get what you're saying. So if a token, and this is a secret weapon, but it's still hard to pull off, right? So if a token can be configured to capture value in a network in a more efficient way than the incumbent who's just taken massive fees. So you got to get the token economics right. It's just non-trivial. And B, you have to use that token then as a lure, right? As an incentive for existing participants of an incumbent network to come on over and try the new one, right? And so maybe I'll go into an example here. And if this sounds stupid, we'll just cut it. But I'm fantasizing about the day this happens to the ride-sharing companies, right? Because these guys, all Uber, I'll just pick on them. Uber did two things. They expanded a market dramatically. So they took a $100 million taxi market in San Francisco and made it a $250 million rideshare market. The second thing they did was they lowered the effective minimum wage of their drivers to as low as $5 per hour. That's a Georgetown University study that cites, walked through and did the whole thing. So all they did was they extracted value from the supply side, took it for themselves, actually ran at a monster negative gross margin for a decade, right? In order to drop the price and give more value to consumers. They're selling dollars to consumers for 80 cents, built up this giant network, ratcheted the margins back up, went public. Bill and Travis and Garrett got rich, and meanwhile the drivers, a third of Uber drivers live in their cars, right? And so they've crushed the supply side. So if you were going to take that fucked up token economy, that just it's an economic fucking disaster, what Uber and Lyft did. If you're going to tokenize that, here's where I would start. I would create a transportation token, a rideshare token, and then I would get it on every Uber driver's phone and say, look, this costs you nothing. Just get this thing on your phone. And for every mile you've ever driven on Uber, we'll give you a token in this new network. Because and if assuming you're 5 stars and blah, blah, blah. So you take the valuable drivers off Uber and you get them into your token economy. And then you say, okay, again, like we're not a payment layer, right? Like people want to pay dollars to drive cars. Drivers need to earn dollars. So you're not a payment layer, you're a bonus layer. But you could probably pretty quickly aggregate the entire supply side of that network and then bring them over and say, hey, look, you know how Uber charges you 30% and during surge it's more like 50, 60%? Fuck that, we charge you flat 3%. The software does all the work that all those employees in San Francisco do. And then you get it out to the drivers, to the riders. And the riders, you can attract riders in several ways. One, this is more fair. Like the person driving you isn't being extracted by Uber Inc. Two, you could probably lower prices, right? You take that 30% rake that Uber enjoys and give it back to both sides. I mean, you probably want to give back more to the drivers. And so that's how I would use a token to disrupt an incumbent in that way.
Yeah, and I love talking about that example too. I use it all the time because it's such a clear example, but it's one that is still 3, 4, 5 years out till we actually see that someone being able to effectively act on that. So we're close, and really simply, one, there's a 30% rake the middleman takes. Guess what? Let's give the drivers 15 more. Let's give the riders 15 more. Who's going to keep using Uber?
Right.
Probably nobody, as long as the service doesn't suffer, right? The other element here is governance, right? And when you have a token, you have an opportunity to democratize a business and let the people who hold tokens, and it's different than shareholders and shareholder rights. No, you have tokens, you can implement decentralized control where actually the code is law and the source code is what's changed, not different layers of bureaucracy that have to flow through thousands and thousands of humans working at a Fortune 500 company. It's really giving power back to drivers, to riders, and having, the people who run software companies be service providers, not rent extractors.
Exactly. Well said. Yeah. What we just described here is going to happen to every two-sided marketplace in the world well inside of the next 10 years.
Yeah.
And that was my whole passion around brain trust. It's not because I love talent marketplaces. I don't care about that category particularly, but we're proving now that this token economy can work on a fairly narrow two-sided marketplace. We're going to build the playbook, and then we want to see it roll out to every single other high-fee extractor. Like Amazon should not be able to take 50% off every fucking marketplace transaction, right? It's bullshit, right? That whole thing should be tokenized, and it will be.
You mentioned something too, and you used it for the Uber example. You talked a little bit about this with talent too, but it's really quality that matters to the buyer. And buyers, and quality for a rider is less of a, it's important.
Commodity.
Quality and safety, but when you're hiring a data scientist, when you're hiring a Python engineer, quality is everything. So what I like about Brain Trust is that you're creating a dynamic where the best talent can rise to the top, and you can align that best talent to the best companies and to every company. But the best talent is what really is going to catalyze the network effect here.
Thanks for saying that. The network effects in that case are get a job, do a good job, get a good review, be more likely to get the next job. And we're actually introducing what we call a token staking feature into Brain Trust. And this is not staking like Ethereum to layer 1 governance, proof of stake. This is staking like putting a bond in with your bid. So let's go back to the $100,000 job example. I'll bid $100,000. Like if you get a lot of bids and they're all kind of the same price, then you're like, all right, how do I tell these guys apart? We're going to allow bidders on Brain Trust to stake a certain number of Brain Trust tokens along with their bid. And that stake then goes into escrow. And if that person screws up the job or walks away or does something terrible, they actually lose the stake, right? So it's a way of bidders to put money where their mouth is and stand out in the competitive bidding process. And so that in and of itself is a network effect device, right? It's like, okay, well, if it turns out to really win a job on Brain Trust, say it's $1 million bid, I got to stake, $50,000 worth of tokens. The only way to get our token is to earn it through helping. Okay, well, you've just created a nice flywheel of, okay, I'll invite talent, they sign up, I get more tokens, I can stake more tokens on my bid, I win more bids, I make more money. The flywheel keeps turning.
Yeah, and so that actually, I think it's a good segue into the next topic. It's the future of work and how contracts will change, how work's changing. And so I'll draw into one little microcosm of lending right now and savings accounts. So we're seeing a dramatic transformation happen in DeFi where I can get a loan in a much different manner with some collateralization on my part, but I can get a decentralized loan from a group of people and a set of open source software. And on the other end, instead of a savings account, I can put my money into a protocol and instead of get 2%, 3%, I'm getting 6, 7, 8, 9% because there's no middleman. There is a token that's being enacted upon. So we're seeing dramatic disruption. I think what you're talking about here is even adding into hiring and contracts, bonding elements. And anyway, so it's interesting. And let's now go back to the future of work and how contracts will work. And how do you see this playing field at Brain Trust where in particular high-tech talent, what does the future of work look like? Do we all have jobs where we just sign employment contracts, or are people going to be more project-oriented or contract-oriented, or it's going to be like professional athletes where we have 1-year contracts and 2-year contracts? Like, what does it look like?
Yeah, it's a great analogy, actually. I think it starts to look more like sports. I think this is what we call an unbundling of the firm. I think that was happening before blockchain came along, and I think tokenized networks like Brain Trust will accelerate it 10x. So a firm, is a fairly recent man-made invention, right? It's meant to aggregate resources in a more efficient way in order to provide goods and services to customers, right? And it did that, right? It was like before that, we were all entrepreneurs, hundreds and hundreds of years ago, and then we figured the firm was a better aggregator of resources. We're going to unbundle it again, right? Because it turns out, and there's two things in play here. One, it turns out firms aren't actually that great aggregators of resources now compared to pick and choose on demand, spin up and spin down economy that we're used to. Like Dr. On Demand, my last business, it's one of the largest hospital systems in the country, and it doesn't have any buildings, no real estate, right? It's all video. You're using Comcast bandwidth. It's not our bandwidth. There's no office space. It's a hyper efficient way to deliver medical care really quickly. And so Brain Trust, I think the future of work is similar. You have people who specialize in what they love to do, and they do it for 5 or 6 or 7 companies instead of just one. And what that does, it's a win-win, right? What it does is it frees up companies from having to sort of warehouse these people for like the 30 or 40% of the time they actually need them. 1, 2, so that frees up a cost center, right? 2, these people don't want to be warehoused, right? The days of cubicle farms and office parks and all that, they're going to go away. In our lifetime, they're going to go away. We're already seeing it in San Francisco, right? These companies, even though San Francisco is like a cool place to live and like the perks are cool, free lunches, people don't want to work at these places anymore, right? A lot of people in Brain Trust are former Apple, Google, Facebook, Netflix, right? Those are great companies, they're cool brands, but these people realize like, look, I don't want to work 70 hours a week. I just don't, like that. And that's kind of the price of admission if you work at a tech company. And so they want to freelance. They want to go to Bali a few months a year. They want to have a house in Vegas. So this is a win-win. Those companies are better off not employing them, just having them spin down as contractors. And the talent are better off by being flexible, right? And so what's the missing piece? The marketplace that connects them efficiently. Right. And so Facebook's not going to pay 50, 60% for some marketplace that, for $100 hour employee, but they'll pay 10. Right. So Brain Trust is this little micro sliver of, okay, we have like 4 types of people, designers, developers, product managers, project managers, that will eventually apply to accountants and attorneys and all kinds of other specialists that are knowledge workers. Right. This may or may not work in like if you're a nurse or a police officer. This may not apply there, but there's a lot of knowledge workers in the U.S., and I think this model pervades.
So let's talk crazy talk, okay? Let's have some fun here. So you have 2 twins. They're 4 years old. They're graduating college. What does the future of work look like for them? I mean, what is your first job at a college? Like, are you working for a company? Are you using is cryptocurrency driving your contract? And what's happening?
Yeah, I think it may not even take that long for our kids.
I know, but what is it going to be like then?
Yeah,
that's what I'm saying. Let's open it up.
I think it's the gig economy on steroids, right? We won't call it that anymore because the gig economy term has been tarnished by these fee extractors like DoorDash and Uber and these guys who just take all the value. I think you have these self-governing tokenized networks for all kinds of work. And as a kid, you pick what you want to be good at. Hopefully it's what you're passionate about, right? Like when we were kids, what you're good at and what you're passionate about were always divergent, and you always had to just go be a CPA, like no matter what you were into. Like no offense to people who like being CPAs. That's so I think those lines converge for our kids.
Yeah.
And so they can pick what they love to be good at. I think we're already seeing this play out on YouTube and TikTok. You're seeing kids that are interested in being influencers in their micro genre and are getting paid to do it, right, through the ad revenue. Like I think that's the bleeding tip of the spear here, and that pervades out. And so when our kids get out of high school, hopefully there are no more colleges, right? That's a fucking scam that hopefully goes away. Hopefully they can specialize. They'll hone their skill, they'll craft their skill, and then there will be these tokenized networks where they can join and say, look, here's how I'll go away from computers. Like I'm a great statistician, right? I'd be a great actuary for an insurance company, although all that stuff's going to get automated too. But and so there's a way for me to prove that I'm a great actuary, and then there's this Brain Trust for actuaries, and it says, okay, like the insurance companies are paying this rate, like take the job. If you do it well, you get more reputation. You can raise your rates. And it's all trustless. It's all decentralized. There are no fees being taken out of the middle because they're all blockchain. It's a blockchain-based tokenized economy running knowledge workers.
Yeah, which, by the way, you even got me thinking about the future of education. And, my guess, if I had to just bet, would be, which I'm betting by savings accounts for college, is that it's just going to cost 4 times as much and it's going to be the same thing. But actually there could be more componentized education that's even put into blockchain. And we could even see educators and professors breaking apart from universities. And obviously tenure, and there's game theory components and network effect components to even keeping talent as a university that are in play here that we don't even see as really economic mechanics that are all happening in today's education. But education itself will go over a tremendous transformation in 25 years.
I sure hope so. I won't opine on it because I'm not an expert in the field, and there's a lot of people who are much smarter than I am. But I do know as a consumer, it's a fucking scam and it's a waste of money. And unless you go to one of the top 3 schools and have that, sort of vanity plate on your car, it doesn't matter where you go, right?
Okay.
Like there's not a computer science degree that's worth the paper it's printed on. You can self-learn everything, so let's hope somebody destroys that monolith in our lifetime.
Yeah, that was like I'm an autodidact. I would go to school, do whatever, draw, think, and then I just read everything I could and learn everything, and then, did pretty well.
Yeah.
So, yeah, but it's nice having structure and framework too. That's helpful. So
yeah, I don't think campuses have to go away.
Yeah.
I mean, the college experience is an invaluable one. It's just the business model today doesn't make any sense.
Yeah. So let's draw back to the present and let's talk a little bit about remote work as it's been. I think there's been, so I love this chart from the Play Bigger book where it's all about the right time for startups. Startups have to manage a technology horizon. Startups have to manage a societal acceptance horizon. So is society ready for this? Is the technology there? And these two things work together in a Y and X axis. And there's some ideas that are like technically feasible, but society's not ready for that. Some of them are societally ready, but the tech's not there. Like, hey, if we could teleport to Miami right now.
Or read each other's minds. Right?
Yeah. One component of this is remote work, right? The tech's there. We're all like, we can all talk to each other on Zoom. But you know what? Society wasn't really ready to embrace remote work. But now we've just been catapulted. And that curve, if we look at that Play Bigger curve, all of a sudden, like that wave just hit a propulsion. And we are in a place where even if the virus goes away magically this summer, or, we have a vaccine in December, we have been forever changed by the training that we're going through. So how's Brain Trust, managing this propulsion of this wave, the societal acceptance wave, and how are you helping your clients and other people in the industry really adapt to the new norm?
This whole COVID-19 pandemic has been an incredible catalyst for remote work, and it is pluses and negatives, right? I think it's forced a lot of big companies to get serious about remote work. Remote work is a huge upgrade in quality of life, right? It saves commuting. It gives people more flexibility. There are some legacy industries where, we have friends that work in insurance, right? And like they have a strict no working from home policy because those businesses aren't set up to track KPIs, right? It's all about butts and seats, which is inherently inefficient, right? So hopefully a lot of those inefficiencies get closed up. And there's clear winners and losers here, but I think it's also showing everybody now that we're 8 weeks into this lockdown that like only remote work really sucks, right? And so you miss like I'd so much rather be doing this with you 4 feet apart than on fucking Zoom, which is terrible quality and the lag and this and then some idiot might Zoom bomb us and be naked.
6 feet apart.
Yeah, don't let the county know that we're only 4 feet apart. Yeah. And so look, Brain Trust is a fully distributed team. We've never had an office. I've never met the majority of our employees in person. We make it work, right? So Brain Trust was able to, in a very small way, contribute to helping our clients, who are some of the biggest companies in the world, like ease into this transition better. And so that's our little modest contribution. When this thing blows over, I think we will have a better understanding of, okay, some things can and probably should be done remote. Other things we really should be together for, right? Like whiteboarding out innovative stuff or bonding or creating human connection. Like, I don't care how many more fucking viruses you throw at us. Like, we're always going to need this human connection. And that's a big part of business, especially creative businesses like ours. And so, I think we're all going to be glad to stop working remotely every day.
Yeah. Well said. So Adam, could you also talk a little bit about Cambrian? I know that Cambrian has been incredibly successful over the last 12 months. And I know there was a kind of an understanding and like I won't say pivot, but let's just say you got ahead of a trend and are doing really well now with Cambrian. Any learnings you have there? And even if you can connect those to the macro environment of today, that might be interesting.
Sure, yeah. So Cambrian is a digital asset management company I helped co-found in 2017 with 2 other guys in Mill Valley, Jay Posner and Martin Green. 2 of absolutely the smartest financial managers, Jay, a trader, Martin on portfolio construction that I've ever met. And I was the CTO. I was the dork to make sure that like the custody thing worked right? I'm not a trader. And I did early stage investing. And the fund, as you pointed out, started out with almost like an index style of the top X number of liquid projects, and then would invest in some really promising early stage things like Scale Labs. And so that, through then there was crypto winter in 18 when everything took an 80% haircut and we weren't looking that smart. And so now, coincidentally, in May of 18, I developed the token economy model for Brain Trust. And then we said, look, let's spin, Cambrian actually incubated Brain Trust. It was a huge, awesome project that we got to work on. And the plan was always for me to run it. And Jay and Martin figured out that long only is actually not the best strategy for capturing value in digital assets. And so they were able to apply systematic strategies that have worked in other asset classes like equities and commodities that basically generate alpha off of the volatility. And so this is not high frequency trading, it's not technical analysis. These are tried and true things that very large traditional asset management firms have generated alpha for decades. They just figure out how to apply it to the blockchain technology. So Jay and Martin wrote these algorithms. It is so far over my head, I won't even begin to be able to describe, but they beat the hell out of the benchmark, which is just holding Bitcoin. And so the firm's been able to grow assets under management over the last year, and it's they've just implemented shorting, and I'm sorry, I don't mean to sound like a TV commercial for Cambrian, but all the credit goes to Martin and Jay. I'm really not involved anymore, but it just shows you though that with asking the right questions and being an innovative person in this space, like it's all humans on the other side, right? So like history always rhymes, and Cambrian's been able to get an edge on generating alpha because this thing looks like previous asset classes.
I was in a crowdcast last night, and really interesting comment about Grayscale and how they're holding like billions of dollars in assets in cryptocurrency, but a huge chunk of that is actually living in USDC, which gives them an in-out ramp to go into fiat and back without any liquidity fees, et cetera. I mean, so just huge changes are happening, and just major firms are coming into the space. So the investment side, which I rarely deal with, I'm dealing with, building, developing, getting decentralized applications up and running. But looking at the big, broader financial side, there's major innovation happening.
Absolutely. I think, look, you and I are 0 to 1 entrepreneurs. I've been an angel investor for many years, and I've probably done 60 or 70 angel investments now. So, but only in early stage things that look like us, right? I have a very narrow pattern match. But I think, to your point, all of these securities and commodities and currencies go on chain, right? And these security tokens have been the next great thing for like 3 or 4 years now, and it hasn't happened yet. But what you have there, again, it's just building a two-sided marketplace, right? In order for investors to come in and buy security tokens, there has to be something they want to buy, right? And so tokenizing some random building in New York, it's just not worth the brain damage for some investor to figure out how to do this thing, make sure it's not a scam, just they can own 1/100th of some building in New York that they could have bought outright, So you need the goods, right? So this will happen. Like companies, if you look at how ridiculous cap table management is today, and how difficult all that stuff is, like I think tokenization makes a lot of that stuff easier. I think we have this now that no one can really go public anymore. All of the value has moved into the private market, late stage private markets, and none of that stuff really gets unlocked, right? There's this massive. The secondary market in venture capital is bigger than the primary market, right? And so you have these innovative companies like SharesPost and EquityZen that are trying to help, early employees at companies like Doctor on Demand or Airbnb or pre-IPO bigger companies. And the process for unlocking liquidity in these late stage companies is just wrought with fees and information asymmetry, and it's great for the operator, right? It's terrible for the buyer, terrible for the seller, right? All of that shit gets tokenized, right? So I think, like, to your point, like we are right on just the top of the first inning for...
Yeah, no middleman is safe.
Exactly
Unless you're providing incredible value at a really great cost with full transparency.
The irony is
they don't exist.
Bezos used to say, like, your margin's my opportunity. Well, now he's the one with all the margin, and he's going to get crushed.
Yeah,
right?
and
this thing will crash over him.
It's your margin is our opportunity is the next wave, right?
Yeah.
So, hey, this has been fun. It's been awesome. Thanks for joining the Block Insider series. It's like I said, we're doing a short mini series, you could say, and giving people a view of the minds and the efforts of people building in the space. So it's been awesome.
Well, thanks for having me. I'm a big fan of Scale Labs. You and Stan and the team, everything you guys do, really amazing. And obviously you're just an incredible entrepreneur. So happy to be along for the ride. And thanks for having me on the first episode here and let me drink your wine.
Yeah. Well, cheers to that. All right. And thanks to all who are listening.